Four stocks I'm buying now, May 2023 edition. Welcome in, folks. It is my favorite video I do on this channel each and every month where I get into the stocks that I'm planning on buying. I'm going to get into the fundamental thesis around these stocks, these four stocks in this video. I'm also going to share four probably stocks at the end of the video that are also stocks I'm planning on probably buying this month as well. We're going to get into my price targets with these stocks. What are the ranges I'm planning on buying these stocks? When do I stop buying these stocks? What price would I stop buying them at? And all those sorts of things. You got to always have a thesis whenever you go in to buy a stock, other than I think it's going to go up. It's got to be several different points you're looking at, income statement, balance sheet, business model wise, and we'll get into all that fun stuff in today's video. So I hope you guys enjoy this video. I appreciate everybody subscribe to the channel. We got a bunch to get into in this one. Also, if you're looking to level up your investing game and let's just call it get to a much higher level with your knowledge and knowing everything to look for in stocks and whatnot, then you can apply to join my private stock group, the private wealth group that will be linked in the description. Might also be the pinned comment down there. Alrighty guys, so first stock I'm planning on buying in the month of May here of 2023 is Amazon stock, AMZN, okay? So Amazon, I'm really excited about this business for a lot of different reasons, and the valuation is extremely attractive, and I think the risk reward of mega cap stocks is probably about the most attractive in the world at the moment, okay? Last year was really Meta stock. This year it's really Amazon stock, okay? And so when I'm buying Amazon, you got to remember I'm getting the #1 e-commerce company in the world. I'm also getting the #1 cloud company in the world. And so I'm actually buying two gigantic large businesses that are going to obviously grow exponentially over the coming years, right? In terms of the e-commerce business and the cloud business. So both those businesses have a long way of growth ahead of themselves. I'm also getting a gigantic advertising business now that is becoming very dominant. It's not as big as Google's advertising business. It's not as big as Meta's advertising business, but it's becoming very large for Amazon now at this point in time. I'm also getting Whole Foods. Amazon owns Whole Foods. I'm getting Twitch. I'm getting, Amazon's actually making their own semiconductor chips on a very high level now at this point in time. So I'm getting that side of their business. I'm obviously getting the Alexa side of their business and many other businesses Amazon has as well. Okay. Now, the interesting thing with me in regards to Amazon is this is a stock that used to be very overvalued. This was many years ago. So about 5 years ago or so, I even put out this video. There's basically talking about why Amazon, and I talked about Netflix stock and why those stocks were very overvalued at that time. By the way, both those stocks are, I believe, lower today than they actually were back then. But back then, Amazon was just a very overvalued stock. It had priced in several years of growth. It just ran too much, okay? And here we are in the spring of 2023 now at this point in time, right? May 2023, and it's actually very undervalued in a major way now at this point in time. And it just goes to show you how much things can change. The market's so volatile. Things can change very quickly in the market in a matter of a few months. It's amazing, right? Now, this matters in a significant way for Amazon and how this company's valued, okay? Because check this out. So in the last quarter, Amazon beat their EPS estimates by quite a substantial margin. They beat it by about 10 cents, okay? Now, for a company like Amazon, that matters in a pretty darn significant way. And the reason being is if you have a company coming in and beating by several $billion in terms of revenue, beating EPS like that, then it makes it more likely that the company's going to likely keep beating throughout the year. And ultimately, analysts will have to start bringing up their expectations for the company, okay? Now, as far as analysts this next quarter, they have them doing EPS of 34 cents. I honestly think they're going to beat that number by quite a large margin. And reason being, they did 31 cents, and that was with a super messy quarter with all these employee layoffs, these one-time costs, and a bunch of other mess going on for the company. So if anything, I think they're going to actually, let's call it beat this coming earnings in a very substantial way on a GAAP basis. And I could see them easily doing 40 to 50 cents for next quarter as well. Okay, now, think about it from this context, okay? Sometimes I like to just break down things simply, right? It's one thing to get into EPS estimates and, beating earnings and all those sorts of things and what the EPS targets are going to be. But let me just ask you these two questions, okay? Are more people going to be buying more things from Amazon or less things from Amazon in terms of the e-commerce side of their business in the year 2028, for instance, right? I think if I just had to put every single person on the globe on a lie detector test, I think almost everybody would say, yes, people are going to be ordering more things more often from Amazon, right? And that's absolutely my belief. And is AWS far bigger in 2028 than it is today? Absolutely, okay? The more you study about Amazon Web Services, the more you just realize, this is still rather early days, and this business has a long runway of growth ahead of it over the next 5-10 years, okay? So there are two main core businesses that matter more than anything have exponential growth ahead of them for 5, 10, 15, 20 years into the future. Someday those businesses will stop growing. I don't know when that is. It's so far from now, it's hard to even fathom that, right? Now, if we go a little deeper in with their numbers, right? Analysts have them doing about $1.53 of EPS this year. That number's far too low, folks. We just saw Amazon easily beat, even in a messy quarter, coming in at 31 cents. And I think they're going to absolutely crush the next quarter earnings, and then they'll crush 3Q and 4Q. This is going to be a year of beats and beats and beats for Amazon, in my opinion. So the fact is, you can look at this and you say, well, I think they're going to do $1.53. I think it's far too low. I wouldn't be surprised if they do $2 of EPS this year, okay? As far as next year goes, let's say they do $2 of EPS, which I think is very much a possibility for this year, then you have to bring up next year earnings, okay? So right now they have $2.59. If Amazon comes in and beats again next quarter, analysts are going to have to start bumping up their 2024 numbers to probably $3, I would say $3 to $3.15, right? Which means, at $2.59, you're paying roughly a 39 forward P for this company right now based upon 2024 numbers, right? But remember, if they do $3 plus, which they probably are going to do in my opinion, then you're likely paying, let's call it a low 30s PE based upon 2024 numbers, which in my opinion is far too low for a company like Amazon that has 10, 20 years of massive growth ahead of itself. So that to me just, is a very, very attractive valuation. Now, you got to think about competitive threats whenever you think about a company, right? And there's only two main competitive threats for Amazon, okay, for their two core businesses. One is Microsoft in relation to the cloud, and the other is Shopify in relation to e-commerce. Those are the only two main competitive threats they have, okay? Is Google a competitive threat on the cloud? I don't really think so. Is eBay a competitive threat to Amazon on the e-commerce side? I don't really think so. Is Etsy? I don't really think so. So the bottom line is these are only two companies that are even somewhat competitive threats. But at the end of the day, Shopify is so small compared to obviously Amazon on the e-commerce side. Shopify can build out a great business for itself without really impacting Amazon pretty much whatsoever, and they've been able to do that. Shopify hasn't really affected Amazon in any substantial way, and Shopify's been able to build a very nice business, actually an attractive stock as well, and I do own Shopify. Microsoft, in terms of Microsoft, obviously big dog, but let's be honest, Microsoft has a lot going on at that company, right? A lot of different business lines. And so I just don't think they quite, and it's clear in the market share as well, they just don't quite have the focus that Amazon has in relation to the cloud and arguably the product as well. So when I look at it from that context, they only have two main competitive threats, and I don't think they're as big of threats as some might think, okay? Now, Andy Jassy, the gentleman that leads this company, I really like this guy. I'll be honest, I've watched several interviews with him now from the past few years. I've obviously listened to several conference calls with him. I like this guy. I can understand why Jeff Bezos made Andy Jassy the CEO, okay? He was the one that really grew Amazon Web Services into the giant profit machine business it is for Amazon today. But the thing I love about Andy Jassy is Jeff Bezos really instilled long-term focus with this gentleman. And I mean, when you hear him talk, he's talking about building relationships with customers that way outlast, his time at the company or the current employee's time at the company. And I think that's brilliant. That is something I absolutely love. And so I really like this Andy Jassy fellow. I think he's absolutely he's a type of CEO that I feel comfortable having my money in for the next 3, 5, 7, 10 years, because I know he's going to do me well. Let's just call it that, okay? So definitely like him and like the management team. Now, in terms of price targets I have for buying this stock overall, okay? So anything under $100 is like load the boat for me, okay? Where it's just buying very, very aggressively. Between $100 and $125, it's a buy for me. $125 to $150, it's a light buy, which means, I just very lightly buy it, kind of in that range. And then once it goes over $150 at that time, it will be a hold for me. And so I believe I'm probably going to have all of 2023 and potentially part of 2024 to be a buyer of Amazon stock, because I think it's probably a good amount of time before it goes over $150. I don't see that happening this year. It could definitely happen in 2024. If it does happen this year, it will likely be in the fourth quarter of this year, in my opinion, after they've come through and kept beating earnings, okay? So I have a bit of time to buy this one, and that's great. Now you might say, well, why don't you just wait to buy this one, since you might have a bit of time to buy this till, let's say, the end of the year or in early 2024 or something, okay? With these sorts of companies, you've got to work with a sense of urgency, okay? And there's a big difference between FOMO and a sense of urgency in the market. When it comes to companies like Amazon, you very rarely ever get those companies to trade at an undervalued valuations and let's call it attractive pricing to get in those sorts of stocks. It very rarely happens. And when it does happen, you better take advantage of those opportunities. Too many people watched Meta stock last year go under $90 a share and decided not to buy that one because, maybe it'll go to 80, and do I really need to rush to buy it? Well, today Meta's $240, and I'm sure in a couple of years from now it'll be $340 and $440, right? And you had people that were like, well, you got to work with a sense of urgency on these sorts of companies, because I can tell you these are the superstar companies of the stock market, okay? These are the Messis of the stock market. These are the LeBron Jameses of the stock market, okay? These are the Tom Bradys of the stock market. And you better take advantage of those opportunities when they're out there as free agents and they're trading for this so dang cheap, okay? Because if you don't grab it, I can promise you somebody else is going to grab it. And the more investors that obviously buy in and the less selling pressure, next thing you know, the stock starts to perform really, really well. So I'm working with a sense of urgency around Amazon. I continue to buy the stock on almost an every week basis, and I will not be done buying for quite some time, okay? Let's get into the second stock of these 4 stocks, and then we'll get into the 4 probably stocks, and this one is Palantir. PLTR. So Palantir is at the cross sections of data and artificial intelligence. Now, when I say artificial intelligence, I know all of a sudden everybody's starting to talk about artificial intelligence the last few months, especially since ChatGPT came around and got really popular. Now everybody wants to talk about AI. Palantir's been working on artificial intelligence way before it became a cool buzzword over the last 3 to 6 months. I can tell you that much, okay? And I've been describing this company as the cross sections of data and artificial intelligence for a long, long period of time now at this point in time, okay? The bottom line is for this company, if you are a government, if you're a military, if you're a commercial customer, they're going to help you make better decisions for your government, make better decisions for your business, okay? Make better, if it could be on the battlefield, make better decisions when it comes to that, okay? Now, when it comes to Palantir, it's a very interesting time to be a buyer of this stock. One is the stock price is extremely low right now. Right now it's in the 7s. The second component is this is a company that's just getting to GAAP profitability, just getting there. Now, usually when a company gets to GAAP profitability, and they can kind of prove that out, you see a massive upward move in the stock price. And so I wouldn't be surprised if Palantir does have a massive upward move in the stock price over the next 1 to 2 years here, being that they're just getting to that beautiful stage of going from GAAP non-profitability to profitability here, okay? They also beat on revenue on the last quarter as well. But the interesting thing is expectations are very low for this stock, even for this upcoming quarter. The analysts have them actually losing money on a GAAP basis, and they have revenue actually that's down on a sequential basis. They did 508 this past quarter. Analysts have them doing 505. So I really like the setup here of kind of low expectations in regards to Palantir. Now, if we look at the numbers a little deeper here, right? I think I'm getting the stock for a very undervalued price. Remember, they're just getting to profitability. So 16 analysts cover the stock. They have them doing EPS of about 20 cents this year, right? Which would put it at a 2023 PE of, let's say, about 38. In 2024, they have them doing 25 cents, which I wouldn't be surprised if they, usually when you see a company just get to profitability, usually the second and third year, you see massive increases in terms of that EPS. So I wouldn't be surprised if they come in with a number a lot better than this. They have them at about 31 PE based upon 2024 numbers. So for a company that's just at the infant stage of profitability, I love this, because usually when you get to a company that's at the infant stage of profitability, you're talking about many times you have to pay, 100, 200, 300, sometimes 1,000 PE for that type of stock. To get it at this sorts of valuations makes it extremely attractive for me. For a double-digit revenue grower over the coming years, oh my gosh, okay? In my opinion, that's a steal deal. Now, also, I get to sleep very well at night. I get to sleep very well at night with this stock. They got $2.5 billion of cash, roughly, on the balance sheet. And they have total liabilities. So if you add up all their liabilities together, we're sitting at, let's say, $818 million of total liabilities as of the end of 2022. So this is a stock I can sleep very well at night. I don't have to worry about them. Are they going to go under? I don't have to worry about any of that. Alex Karp leading this company, before we get to kind of my buy prices and everything like that, let me speak on Alex Karp for just a moment here. So in regards to Alex Karp, I think he's the right man to be leading the company. I don't think he's always the right man to be talking about the stock in the business. I think there's other people that could probably do that on a better level than him. But I do think he's done a phenomenal job, and he's attracted one of the most impressive workforces in the world, right? And so I believe this company is going to become exponentially larger than it is today. I think they're going to become one of the most profitable companies when it comes to their net income margin you're going to find out there. And so I'm very excited for the future of Palantir here. Okay, now in terms of buy prices and all that good stuff, here's what I'm looking at. Under $8 is a load the boat situation for me in regards to Palantir. It means I'm, pretty much going to be buying it almost every single week, which is something I've been doing pretty close to almost every single week recently. $8 to $10 is a buy for me. In regards to Palantir stock, $10 to $12 is where I start to do, smaller buys, let's call it light buys, whatever you want to say in regards to that. Over $12 at that point in time, it would just be a hold for me. Doesn't mean Palantir wouldn't still be a buy over 12 because it might still be. It's just I'll have bought so many shares at that point that I'll be good and be ready to just kind of hold this stock from that point on, okay? So that's the second stock of these four stocks, okay? Let's get into the third stock of these four stocks, and we'll get into the probably stocks, and that is Cheesecake Factory. Ticker symbol cake on this one. So Cheesecake Factory, Amazon, Palantir, those represent more growth stocks, and my strategies, GVD, right? Growth, value, dividends. And Cheesecake Factory represents a dividend stock and a value stock here, okay? Great risk reward profile on Cheesecake Factory. The big dividend yield on this one. If you want to know why it's been such a tough 5 years for Cheesecake Factory, right? The stock's down 37% over the past 5 years. First off, I don't care what a stock is up or down before I got into it. It's actually completely irrelevant to me. All that I care about is where that stock's going over the next 5 years. What happened over the last 5 years is kind of irrelevant. But to explain that, because I think it is worth mentioning, right? Whether it was an Amazon situation where the stock hasn't gone just about anywhere in 5 years, or Cheesecake where the stock's actually gone down over the last 5 years, right? They got hit with Rona, which obviously came out of nowhere and just wrecked their business in the short term. I mean, it's a restaurant chain that, had hardly any to-go business, and next thing you know, their restaurants were forced, the government forced their restaurants to be closed, along with all the other restaurants, right? So they had to adjust to that. That obviously was a dramatic situation. Then they had to deal with the highest inflation we've seen in literally decades, which is one of the worst things a restaurant could ever deal with, because then you're talking about wage inflation and you're talking about your raw commodities. Like it's devastating, right? And then the third thing that's hurt this stock is obviously recession fears, because if there's recession fears and worries about the profitability if we got into a recession or something in regards to that, in regards to Cheesecake Factory, right? I mean, shoot, if people are out of work, then are there as many people to go out there and dine at the Cheesecake Factory, let's say, for instance, okay? Now, in regards to the recessionary fears, they're not as justified as some might think, okay? And this is important to know this, okay? So in regards to a recession, it hurts their comp store sales. There's no doubt about that, right? And that goes for any recessionary scenario. But you might think this company must lose a bunch of money during a recession. Think again, okay? Look at this. This matters in a significant way. If you check out their adjusted earnings or loss per share over time, this is a company that's proven they can be profitable even in situations where the comp store sales are going down, even in recessionary scenarios, right? 2008, still profitable. 2009, profitable. 2010, profitable, right? And so that just goes to show you a company like Cheesecake Factory can do very well even in those time frames. Look at free cash flow, even during those years, right? 08, $85 million of free cash flow, $163 million of free cash flow in 2009, which was obviously a very bad year for the economy, $128 million of free cash flow in 2010. So it just goes to show you a company like Cheesecake Factory can show actually great strength, even in a, let's call it, rougher economy. And so that's why I don't worry about this one, even with the recessionary scenario. Now, in regards to Cheesecake Factory, it's not just I'm getting Cheesecake Factory as far as that restaurant chain. I'm also getting North Italia, which I think has crazy long-term growth in the United States of America. I've gone to North Italia probably, maybe 7 or 10 times now. I can tell you, food is always phenomenal. Service is always phenomenal. We got a nice location in Summerlin, and I think they got one opening up in Henderson here very soon. That I could see that being a restaurant chain that has 100 to 300 restaurants open throughout the United States easily in, let's call it, nicer neighborhoods and whatnot. So a lot of growth as far as that goes. There's also an FRC, which is an interesting concept where basically they'll experiment trying a bunch of different restaurants and trying to see what hits and what doesn't hit. And some work out great, and then others don't quite make it, right? And so that's an interesting concept, because basically they can try to find the next Cheesecake Factory, the next North Italia. And so I love that concept for long-term growth, right? Now, in regards to kind of EPS expectations and whatnot, as far as this year goes, 276 EPS expectation, trading at a forward P of, let's say, 12, based upon this year's numbers. 335 analysts had them doing for 2024. They'd put it at a forward P for 2024 numbers based upon about 10. So I'm getting an undervalued asset here. Very, very undervalued. I love this one, okay? Now, here we go to balance sheet. Certainly not the greatest balance sheet in the world. Total assets of $2.7 billion. Total liabilities of $2.4 billion. Do keep in mind capital leases make up $1.2 billion of that, okay? So that is something to keep in mind there. So that doesn't make me it's not as ugly of a balance sheet in my opinion as it might seem when you see that huge capital leases number, right? So I would give them like an okay balance sheet. It's certainly no Texas Roadhouse. Texas Roadhouse is another company I personally own. Texas Roadhouse has, in my opinion, probably the best balance sheet of any restaurant chain in the world. So yeah, it's no Texas Roadhouse, but I gotta say it's still an appropriate balance sheet. I'm not worried about this one, okay? Now, here's the deal, okay? This is a 3% plus dividend yield. If they do EPS of $2.50 to $3, which they likely will in 2023, it's a very low payout ratio there, right? Which means they have a lot of room to likely up this dividend over the future years. So yeah, if I'm buying the stock right now, I'm getting a 3.2% dividend yield, but it's very possible here, folks, that based upon my shares, in future years, I'll be getting a 4% yield, 5%, 6%, 7%, 8% yield. That's a beautiful thing with owning dividend stocks is whatever you were getting to that dividend yield at first, right? Great dividend companies keep raising that dividends more and more and more. And then based upon the shares you bought, I mean, from my understanding, Warren Buffett owns some Coca-Cola shares that, before we get into my price targets and whatnot for Cheesecake Factory, it's interesting. I believe Warren Buffett owns some Coca-Cola shares that he's getting like 100% dividend on now. Basically meaning what he was buying the stock for back in the 80s, based upon what their dividend payout is now. Like he's getting basically on an every year basis what he paid for that stock just in a dividend. Like, hard to even fathom. Like imagine that, right? Just another reason why it pays to be a younger investor out there in the market, right? Now, in regards to buy prices and everything like that, in regards to Cheesecake Factory, here's where I'm at. Under $30 for me is a load the boat situation for Cheesecake Factory. $30 to $35 is a buy for me in regards to Cheesecake Factory. So that's where obviously Cheesecake Factory is right now. $35 to $40 is a light buy for me, and over $40 is a hold for me. I'll have likely bought as many shares I need to buy in regards to this one, okay? So that's Cheesecake Factory. Now let's get into the fourth of these four stocks, and then after this stock, I'll show you the four probably buys for me as well, okay? The fourth stock up here is Tesla, my Tesla, okay? Yes, Tesla. So 2023, first time been a buyer of this stock since like 2019. It's been a long time. So in regards to Tesla, okay, obviously the stock has had a lot of trouble recently, and it's not for no reason. I mean, to be honest, their numbers haven't been the best, obviously, this year, right? They're still putting up decent growth in this environment, right? 18% growth in automotive margins in the last quarter, 148% energy generation storage revenue. That's incredible. 44% growth in services and other revenue, which continues to be a growth engine for them. Total revenue is a 24% growth. I mean, in this environment, folks, that's a good number. In this environment, when, it's not a great environment for selling high-ticket anything, whether that means, homes, cars, any of that type of stuff, high-end furniture, it's a bad market for that. So the fact is that Tesla can still put up 24% revenue growth in this environment goes to show you how strong of a business Elon Musk has here with Tesla, okay? Absolutely incredible. Now, in regards to profitability metrics, anything in relation to that, margins, bad for Tesla in the short term. Bad. But this is a short-term phenomenon, in my opinion, okay? Elon Musk, in my opinion, it's like you ever seen in Game of Thrones when, Daenerys, it's one of the last episodes, she burns down that whole, King's Landing or whatever the place is, and she burns the whole city, okay? That's Elon right now, okay? I think Elon knows in this sort of environment where big ticket purchase items are going to be in a slower period here for a bit, I think Elon understands this is my chance to take massive market share from a lot of these big dog internal combustion engine companies. We know Elon's 100% on the wave of he wants to see EVs take over the whole market, and I think he's looking at this is my opportunity. And so I believe Elon's sacrificing the company's margins and profitability in the short term, and he's basically even said this on the conference call, that he's sacrificing all that in the short term for the long-term opportunity here in front of this company, right? Which is growing massive market share, which is getting this company to a place where they're going to be producing 5 million, 10 million, 15 million vehicles per year. and then making obviously exponential amounts of money on the services revenue, which is a similar business model to actually Apple. And so I believe Elon's looked at what Amazon's built over time. I believe he's looked at what Apple's built over time, and he's adapted his business to understand that. And he's taken a Jeff Bezos type approach on margins and profitability in the short term for the long-term gain. And he's also taking an Apple type approach in terms of understanding how big the services revenue can be once you have a massive installed base. So Elon's, I think, Elon's a smart dude. That's all I'll say about that, okay? He understands what he's doing. A lot of people try to down him. Not usually a great decision, okay? Now, in regards to my projections for Tesla, this is my Tesla bull case. So in regards to Tesla, I have an ultra bearish case. I have a bearish case, I have my base case, I have a bull case, I have an ultra bullish case, okay? Now, in regards to like growth rates and whatnot, I just have them doing like an average per year, of certain numbers. Now, for my bull case, I have been doing about 37% revenue growth on average per year, okay? Now, will they do that this year? Probably not, but there's going to be, maybe next year, they'll probably do far exceeding that, especially with Cybertruck fully ramped next year. So they've been doing about 37% revenue growth on average for the next 5 years, which puts them at a revenue of just over $400 billion of revenue in 2027. I have them doing about 40% on average net income growth. Obviously, they're not going to do that this year, right? But they're going to play a lot of catch up, in my opinion, next year and in future years. And so based upon that number, I have them doing just under $70 billion, about $69 billion of net income for this company in 2027. So if we're looking, I think a midpoint is pretty fair, about a 40 PE if Tesla's growing at some sort of rates like that, even if they're expected to go down, right? I've been doing, their market cap being about $2.7, $2.8 billion, which right now Tesla's market cap is about $500 billion. And so going to $2.7 trillion is quite a rise there. So in regards to my price targets with Tesla, and then we'll get into my 4 probablys here. For me, in regards to Tesla, under 200 is basically a buy for me in regards to the stock. If it goes under 150 again, that's kind of like, let's call it more of a load the boat situation if it was to go under 150. I love the risk reward. Tesla has one of the best balance sheets you're going to find. Actually, Tesla has the best balance sheet of any automaker you're going to find out there now at this point in time. The creme de la creme, and it's incredible because when I first started investing in the stock, the balance sheet was questionable. 5 years, it's now the best balance sheet in all the automotive industry. Absolutely incredible what they've pulled off here. It's obviously a very profitable company. I have full faith in the management team of Tesla, in their employee force. One of the best employee forces you're going to find out there in regards to Tesla engineers. And imagine all the products Tesla's working on right now that we haven't even seen yet, that you're going to see shown off in 2 years from now, 4 years from now, 5 years from now, 10 years from now. I mean, think about those. And, opportunities that are just as big as anything they've shown off to date, if not bigger opportunities. Remember, teams like this, management teams like this, employee forces like this, they keep the pedal to the metal and they keep changing the game. And we know Tesla, that's their name of the game. So I'm really excited for where that's going. Obviously, robo-taxi opportunity is huge over time. Obviously, when you look at how some of these businesses are scaling, like the storage revenue, the services, I mean, just incredible opportunities in regards to Tesla, my Tesla. So I'm a very happy shareholder. Tesla have been for many, many years now. And I'm very excited about where this company's going, and it's an undervalued stock now at this point in time, okay? Now, in regards to the 4 probably stocks that I'm going to probably be buying, these are those stocks. First one is AMD. Lisa Su's done a tremendous job turning around that company and building just a great behemoth semiconductor company that has, around the best of breed products in several different spaces. So I really like that one. It's about $82 here today. SDAO, which is basically 3x against the Dow, which is more of like a hedge for me in the market because obviously I'm loaded up on a lot of long positions. So SDAOs could be something I'm looking at. I own a bunch of SDAO already. I own also some SDAO call options. And, those are like my hedges in the market, just in case the market goes down in any substantial way for any reason. I own Honest already, but I might buy some more Honest as kind of my spec play. I think Carl is going to do a great job turning around the business. And I, have been very impressed with their branding and whatnot. Just their numbers and the execution hasn't been there, but they got a new CEO in place who came over from Amazon. And I think she's going to do a very good job. Let's just put it that way, okay? Johnson & Johnson. $163 stock here today, forward P of about 15 on this one, 3% dividend yield, and so J&J is one I like from the dividend realm. Hope you guys enjoyed today's video. As always, I appreciate everybody taking the time to enjoy this video with me. Thanks for being subscribed. Thanks for being here, folks. If you want to take your investing up to the next level and learn everything I know up here, plus be part of our 6- and 7-figure Discord chat, then go ahead and check out the pinned comment down there. It'll also be in the description. That'll be to apply to join my private stock group, the private wealth group. Much love and have a great day.